and welcome to Do Whatever You Think Whatever You Do, episode 10. I'm your host, Daryl Scott, and last week we spoke about financial stability and building generational wealth, and we touched a little bit on the effects that real estate can have on building financial stability and generational wealth. Today we'll be talking about insurance and how this affects the mortgage rates and interest. Today, my special guest is Mr. Jason Bolanini.
Thanks for having me, Daryl.
Thanks for coming on. So, Jason, tell us a little bit about yourself.
About myself, I guess my professional career started in 1994. I was on Wall Street. That transitioned into the insurance industry later on in life. Okay. And I've owned my own business. We're a retail insurance broker in Baldwin, and that started in 2001.
Okay. So how long were you on Wall Street before you decided to leave?
So I never really left Wall Street, but actually getting into the crux of it, actually working with stocks and working with trades and all that stuff. That was from 1994 to 2000.
Okay. And then what made you kind of move over more into the insurance side?
Great question. So Wall Street, very, very dynamic. Mm-hmm. A lot of greed, a lot of moving parts. It didn't take long to realize that people were losing money more than they were making money. And that really didn't sit right with me. It wasn't something I was comfortable being involved with. People were getting hurt, massive losses. We had a couple of crashes. Mm-hmm. And it just wasn't something that I enjoyed, and I didn't think I wanted to bring a family up with that sort of occupation.
Okay.
So insurance, a lot different. Not much greed, a lot of need. Everybody needed insurance, okay. And we were helping people, and you were establishing relationships with your customers, and it was just a nice mix for me.
Okay. Yes, as you said, insurance everybody needs. Definitely, we all need. Insurance is something that you have to get in order to get approved for a mortgage loan, because this is something, the mortgage, the people that are loaning you the money want to make sure that they can get their money back. So insurance is necessary.
Absolutely. Right.
So talk to us about how the insurance rates can impact your mortgage.
Great question. So there's I guess a calculation that the loan officers use, and they work with the banks closely on this number, and it's they refer to it as PITI.
Yes.
The PITI stands for principal, interest, taxes, and insurance. Mm-hmm. The combination of that number gives the banks an idea if their customer mm-hmm. is going to be able to afford the payment of the mortgage.
Okay.
And if the insurance number is out of whack, it could throw that number off.
Yes.
And the way insurances have been increasing over the last bunch of years, there's no question in my mind. I speak to the loan officers. Deals are broken all the time and busted just because the insurance is just too high.
Wow. So has the insurance rates climbed in recent years? Like what happened
yes.
to make the
dramatically?
Okay.
It's a combination of a bunch of stuff. I mean, if the cost of materials are getting more expensive to reproduce a home, mm-hmm. If expenses overall in an economy are rising, it's only common that insurance is going to go up as well.
Okay.
And the reason why we say that is a house burns down to the ground, 20 years ago, maybe that was a $200,000 fix.
Okay.
Today, with the cost of materials and supplies being so expensive, what used to be $200,000 is probably $400,000. Mm. So big difference as far as the cost of materials. And everything else in the world right now is very expensive. Borrowing money is more expensive than it used to be. And all these things, they get put into this big machine of insurance. And at the end of the day, if if the claims are higher than the money that they're making, then there's only a couple of ways to fix that problem, and one of the most effective ways, they're going to increase premiums. They'll increase the rates, and people are going to pay more for insurance, and that's where we are today.
Yeah. So, is getting insurance for a home standard, or do different types of people have different types of insurance policies?
Yeah, well, there are always different types. The people that have it and the people that don't. If you pay for your home in cash and you don't have a bank involved, you could self-insure. You don't need insurance. And if, God forbid, something happened, you could fix that on your own. Not many people could say they could do that.
Yeah.
The reality is, I don't know, there's got to be a figure out there, but the overwhelming majority of people that are purchasing homes are using a bank's money or private money to do that. And that lender, at the end of the day, is going to want to make sure that they're protected.
Yeah.
And how are they going to protect themselves? They can require that homeowner insurance is on that property. If it should, burn down, have a total loss, if there's significant water damage, something that takes place, they're going to want to make sure that they can become whole and have those issues fixed. And insurance companies provide that protection.
So, things like fire, flood, if someone breaks into your home, these things are part of the insurance automatically.
Standard homeowner policy is most likely going to cover all of those.
Okay. What about if you have pet? What if you have a dog, for instance? Would that automatically be included in this policy, or would that be a certain policy where you would add on?
Okay, so I'm not quite sure what the question is.
Oh, okay. Well, so like if your dog harms someone else.
Okay. All right.
Yeah.
So dog liability is a big issue.
Okay.
It's been a hot button over the last bunch of years. Most insurance companies are going to cover you through your homeowner policy if your dog harms somebody else.
Okay.
It gets messy when we talk about the breed of the dog, and if you revealed on the application that you have this dog. So the Rottweiler, the Pit Bull, the Doberman Pinscher, the German Shepherd, these are dogs that could do a lot of damage, and history has shown us, even though they're fantastic breeds, I'm a dog lover, the insurance companies, they will be skeptical. They might rate you. You may pay a little bit more money, or they may choose to not be on that policy, to not give you coverage based on the breed of the dog, or if you don't reveal that you do have a dog. So there is pet insurance that's a separate policy outside of your homeowner policy. And the insurance company might say, listen, we'll insure you, but you're going to have to show us proof that you have dog liability as well.
Got it.
And that's becoming very, very popular these days.
Real quick. So a person can get homeowner's insurance and then get dog liability separate from the homeowner's insurance?
Yes.
Oh,
yeah.
Okay.
Yeah.
Because I was just what I was going to say, what if someone does get homeowner's insurance, they do have a pet, they don't say anything, and then it turns up that the pet does injure someone and it is a liability. What would happen? How would the insurance respond to the homeowner?
Yeah. So you would hope that an insurance carrier would honor your claim and pay for damages. But if you don't reveal that information on your application and something does happen, they have the right to not pay that claim based on misrepresentation.
Got it.
It's a huge issue right now over the last bunch of years. I believe in the state of New York has come to all of the insurance carriers requiring them to cover all breeds of dogs because it was just becoming too common that a lot of families were saying, hey, we can't get insurance coverage because we have this beautiful pit bull.
Yeah.
And a lot of the pit bulls are great house dogs. They're good family dogs, and they just get a bad rap. But the insurance company, they just see, that there is a risk that these dogs have in the past, have harmed people. So New York State stepped in, and they, I think they're requiring all carriers to now allow all breeds of dogs on homeowner policy, so they can't be restricted.
Okay.
Yeah.
So, in terms of someone having an emergency, like a fire or a flood or something, how quickly does the insurance policy come through?
That's a good question.
Mm-hmm.
My answer to that is different.
Okay.
So the better, if you have a quality insurance carrier,
Mm-hmm.
they're going to respond immediately.
Okay.
They might even cut you a check immediately, right on the spot,
Mm-hmm.
to get you guys back on your feet.
Okay.
Some of the garbage policies out there, and there are garbage policies out there, you can wait weeks. I mean, horror stories. And if you're not working with quality and you're really looking to just save every dime that you possibly can, chances are, if you have a claim, you're going to be jumping through more hoops to get paid and to get a response to your claim than if you're working with a quality, highly rated insurance carrier.
Natural disasters. Do insurance claims usually cover, like if it was a tornado or a hurricane, if a tree fell on your home?
Mm-hmm.
This is happening a lot recently because the water is just seeping into. That's what they're saying, at least.
Yeah, there's no doubt about it. I mean, natural disasters are a big nut of what these insurance carriers are paying out on an annual basis.
Really?
They're not concerned about the small claim here or there.
Yeah.
It's when a natural disaster takes place, there's thousands of claims, and they're usually large.
Yeah.
And that's very, very impactful to their balance sheet. So, they do respond to those, and they're prepared for that, and they have to keep a certain amount of money in reserve to make sure that they can make these people whole. But it's enormous. I mean, the number is in the billions.
Really?
That some of these larger carriers are paying out on an annual basis just on earthquake damage, hurricane damage, tornadoes in the middle of our country. Every part of our country has their little thing as far as natural disasters go, and it is huge when it comes to how much claims and how much money that the insurance carriers pay out for them.
So would premiums go up from a natural disaster?
They do.
They do.
They do. So, at the end of the day, the insurance carriers would love, in a perfect world, nothing happens to your home, you pay all the time.
Yeah.
That's a perfect world.
Yeah.
You pay us, we don't have to pay you. Right? Great business plan.
Yeah.
If that should happen, the perfect world for the end user is, okay, you don't touch my rates. I'm going to stay at this premium.
Yes.
And most likely it would.
Okay.
But when you start to throw claims into the mix, whether it's you or people in your general area, if the bank starts to see that they're paying out more money than what they're taking in, one of the most effective ways for them to fix that problem is to increase rates, take more premium in. And that's what we're seeing over the last bunch of years.
So they would usually take that in an area. They would usually pocket out areas based on, I guess, the disaster.
Yeah, they look at different zones that they have, and they have to treat them differently because, let's say, for instance, upstate New York is going to deal with a lot more frozen pipes than what you have in the downstate area.
Yeah.
Downstate area is going to deal with a lot more flood and tidal waters than what the upstate. So they're not the same animal. But at the end of the day, the bottom line is what the insurance carrier is looking at, and if they're in the red, somehow, some way, they're going to make sure that they can recoup that. And on the flip side, if they're in a positive and they could sustain that and they could stabilize those rates, they would love to keep them put and maybe even issue a couple of rate reductions in different areas.
Okay, so do insurance rates come down? Because I know you talked a lot about them going up based on this, that, and the other.
21 years in the industry, I have not seen insurance rates come down that often.
Okay.
Every now and then we do get a notification sent to us and one of the carriers is bragging about that they're extremely happy to announce that they've reduced rates. It's typically not in our area.
Oh, wow.
You're typically going to see those rate reductions, elsewhere.
Okay.
We don't really get to celebrate that too often, but it does happen every now and then.
Okay. What about an investment property? How does it work for someone who purchased a home and they're renting it out to?
Very good question.
Yeah.
So your primary resident, we're going to insure you with a homeowner policy.
Okay.
That's going to cover their home. That's going to cover liability to protect you from lawsuit. It's going to have contents. Much, much different animal when you're talking about a landlord policy. A landlord is really concerned with just protecting their property. They want to make sure that the home is protected and covered. God forbid there's some sort of a disaster.
Okay.
As far as the renter, they should be advising the renter that they should have their own renter's policy to cover their contents and a little bit of liability as well.
Mm.
Much, much different policies. So your homeowner policy and your dwelling fire policy is what's going to cover a landlord.
For renter's insurance, how much usually, let's say annually, does it cost for a renter to have insurance?
These are really the best policies out there and,
They
the most attainable policies
Mm.
For a couple of reasons. If you have if you drive a car, you have auto insurance, you could probably bundle a renter's policy, which is going to cost you $200 a year, maybe $300 a year to cover your contents, give you some liability coverage, and you're probably going to receive a bundled discount where you'll save a certain percentage on both the renters
And the
auto.
Nice.
So it's almost like the savings that you're getting on the auto,
Mhm.
you could parlay that into the
Into the
renter's
renters.
policy.
And
It's
now
a
everything
very,
is
very
covered.
smart
Yeah.
strategy. It's not going to cost you a lot of money. And God forbid something happens that the person upstairs leaves the water running and it came down and ruined your television and the wall and it got onto your rug and it got onto your couch. That insurance company is going to cover that. That's exactly what the
What
renter's
they do.
policy is
Okay.
for. So it's cheap, it's simple, it's effective if you need it, and if you don't need it, God forbid, you don't have to use it. Thank God. It didn't cost you a lot of money. So
Yeah.
it's very inexpensive, and there's good coverages there.
Yeah, that is true. Do you find that a lot of renters are taking out insurance policies for their contents in their home?
Not as many as you
No.
would think. You would think that at $200 a year,
Yeah. It's not
more
bad at
people
all.
would take advantage of that because shit happens.
Yeah.
And you don't want to be on the wrong side of that.
for the year, and then if all your contents are
Sure.
messed up, I mean,
You spend $1,500 on your laptop.
Yeah,
You have,
exactly,
a $3,000 television. You spent $1,000 on your couch, and
yeah,
fires happen.
yeah, exactly.
You're cooking something, you forget about it,
or this thing that you said, like water running from someone else's apartment downstairs, that
Happens
can
all the time.
Yeah, these types of things. Can
that's
happen.
on you. It's
Mm.
not on the landlord. The landlord should be able to say to you, I advise you that they should require it to be smart, but not all of them follow through with it. But they're not responsible for that. That's
Yeah.
on you. That's being a responsible renter and understanding what your needs are and budgeting $200, $300 into your annual budget every year.
Yeah. Let's go back into claims a bit.
The fun stuff.
Yeah. So, what would you consider a quality claim versus
I
a
understand.
claim that isn't? And what kind of impact do claims have on someone's policy?
It's very impactful.
Okay.
As a broker, as a retail agent, you never want to see a claim.
Yeah.
But you're there if it's needed.
Mhm.
Insurance companies, their thought process in providing insurance was never to help people with these little small micro claims,
Okay.
$1,000, $2,000. That was never the thought process
Yeah.
of insurance. The original fire policy was, you have the largest quite possibly the largest investment in your life.
Yeah.
Couple of $100,000 today. Not uncommon to have $1 million, $2 million home right here in Long Island. We insure them every day. God forbid that should burn down, or there was a major event that took place. Fireplace started a fire and took out your living room and part of the kitchen. It doesn't have to be the whole house.
Yeah.
But insurance was really originally put into place so that it could make you whole, get a family back on their feet if a fire took place.
Yeah.
And they pay them every day. Hundreds of thousands of dollars, millions of dollars every day are paid out in claims from the major carriers every single day. And they want that. They want people to know your house burns down, we're there.
Yeah.
You see it on their commercials all the time.
Yeah.
The small claims is really what's hurting the industry. $1,000, $2,000 claim, is an insurance company going to pay that out? Yes, they will, all day long. Where's the impact come? Well, now that claim is going to go on your insurance score. It's going to go on your claim history, and it's going to be very likely that upon renewal of that policy, the insurance company is going to review you, and they're going to say, okay, well, this guy put 2 claims in this year for $3,000. It's not a good look. It doesn't look good. They have a couple of options. One option is to non-renew you and say, we're not going to continue to do business. Thank you very much. And you're going to have to go somebody else. Or they're going to hike up your premium a little bit. They're going to rate you on that. They're going to surcharge you, and it's going to cost you a couple of bucks. So the reality of a small claim, it might feel good right there to get $2,000 to fix maybe the water, the hot water heater leaked and ruined the rug, and some tile work had to be done.
Yeah, I was going to ask about some examples.
You're probably better off fixing that on your own.
Yeah.
But the insurance company will pay you out if you don't want to, right? But at the end of the day, you're now marked with a claim, and you will pay the $2,000 that you got. You're probably going to, it's going to come back to you threefold in increases. Yeah. So you really should think that out. And that's what we're really getting hit with these days is you don't every day get the phone call that, my house went on fire.
Yeah.
It doesn't happen often. But you do get these small claims that are becoming very frequent.
So what would you claim? Like a slip and fall type?
Well, slip and fall is on liability, right?
Okay.
So that's a lawsuit.
Okay.
Lawsuits are lawsuits.
Yeah.
There's frivolous ones out there, and that's a whole different story. That's another segment. You're going to invite me there for slip and fall.
Yeah.
But the hot water heater rusts out.
Oh, okay.
Water gets all over the place. It's a small claim. What do I advise? I definitely think you should ask your insurance professional that question. Hey, hot water heater blew. I got a mess over here. It's not horrible, but I got some quotes. It's going to cost $2,500.
Yeah.
What do I do? And your professional should be able to come to you and say, hey, look, you have a $1,500 deductible. So at the end of the day, you're really only going to get $1,000 if that. I don't believe that that's a very small claim to put through. You're going to pay for that down the road. But maybe you got a $500 deductible. Maybe times are tough right now. You need to get this fixed. You don't have the money. And you say, look, I'm struggling as it is right now. I know that my premium is probably going to go up or how likely is it that my premium is going to go up? I'd hate for that to happen because I am struggling, but I don't have the dough to put out right now to fix this. What do you suggest I do?
Yeah.
And your professional should be able to say to you, look, you got a $500 deductible. You're getting quotes of $2,500 to fix this. You're going to get $2,000 to fix this. Is it a horrible claim? That's not a horrible claim. Will you pay for it down the road? Yeah, you're probably going to get increases. You're most likely going to get an increase. That's just how insurance is working these days.
Yeah, my question next was going to be if someone came to an agent like that and they did understand the story, would they be able to make notations on their account so that when they do their premium next year, they'll do. But
I would love to say that. I would love to say to everybody that these insurance companies that are located in California, Texas, that they would love to see, you as Daryl.
Yeah.
But at the end of the day, your policy, your insured number 1754 NYHOS, and the story. On the flip side, there are huge disasters that take place that they will put a face to that.
Okay.
A fire with a death in the family, and something really, really dramatic like that is going to resonate up to a corporate office, and you might see some sort of a human approach to that claim. But no one gives a shit about your oil, your hot water heater, exploded and there's water on the floor. That's a claim. That's dollars and cents to them.
Yeah. So before the insurance company would insure a property someone's purchasing, it would have to first get appraised because they need to know.
Yes.
Exactly how much the property is worth.
It's a fantastic statement to bring out because I don't think a lot of people realize that. It's becoming a really, really big topic in insurance. Every insurance carrier, when they take a new insured on and they're going to insure a home, they have these inspectors, home inspectors, that are going to go out, they're going to drive by, they're going to take a look at the overall condition of the home. They're going to make sure the roof is in good condition. No gutters are hanging off. The siding is good. There's no broken windows. The sidewalks aren't buckled. The driveway isn't buckled.
So they're doing a very extensive.
It's become very, very strict. It used to be loose. It used to be a lot looser.
Okay.
Well, because they're realizing they're numbers people. They're about looking at the numbers, and they know when we have strict inspections, less claims are taking place because we're picking up that 4-inch buckle in the sidewalk that Mr. Jones tripped over, and that was suing, Mrs. Smith.
Yeah.
So if an inspector sees that, they're going to say, look, that needs to be fixed.
Mm-hmm.
We're going to give you a little bit of time, and we'll keep you, but if it's not fixed by the deadline, we have to come off of this policy.
Oh, so this is what they would do.
Yeah.
And the same thing about letting you on to their policy in the first place. They would say, well, these things kind of need to be covered. They kind of want the property and everything to be in a whole and in good condition, if you will.
Yeah, so they give us an agent or a broker. They give us the latitude to take you on as a policy and insure you right there and then.
Okay.
The inspector comes out within a week or so, and they take a good look at what's going on there. Also very common is they're looking in utility rooms now to make sure that there's certain circuitry and certain breakers that are in place. It's become very, very strict. And then if there's an issue, they let you know and they give you a little bit of time to fix that. They don't just hammer you down. The law will not allow that to happen. They give you a little bit of time to fix it. And if you can't fix it or if you're not willing to fix it, that's fine. You move on to the next carrier. They don't want that. They don't want you to. They don't want to have your policy if you're not willing to fix it. They'd rather you go someplace else.
Mm-hmm. And then, how hard is it to find a new insurance carrier if you've had a certain amount of claims?
Great questions, Darryl. It gets difficult.
Mm. Impossible? No.
It's not impossible.
Okay.
It's definitely not impossible.
Costly.
But you go on this bad boy list. All the insurance carriers see the claims. They see everything. They see if your pay history is good, if you're paying you on time, how many times you've had policies cancel, how many claims that you had, what were the claims for, how much money did they pay out. They see it all. Yeah. They all work together because they're all in the same bucket. They're all in the same sandbox, and they want the insurance industry to flourish. And if they're all getting hammered, it's not flourishing. Yeah. So they work with one another. Mm-hmm. And if you're on that bad boy list, it's becoming common where I say, look, John, I'd love to write a policy for you, man, but you got 4 claims in the last 3 years, and no one really wants that. You actually have a claim that's existing right now. It's not even closed. you're almost uninsurable. I would stay where you're at. If they're willing to keep you, then stay there. But if you're getting non-renewed, we have to look at alternative sources to go for your insurance, and New York State provides that.
Okay. Okay. So at least there will be resources. There is a way.
There is
for
a
people
way.
to get insured.
New York State has, basically an assigned risk homeowner policy that if no one else is willing to write you, they will give you a policy. You're going to pay for it,
Yeah.
and it's very watered down. It's a very basic policy. It's not these pretty bundles that the national branded insurance carriers are given. This is money that you're paying to New York State and a New York State sponsored company. They're not giving you the bells and whistles.
You're going to be paying more out of your pocket. If
Plain
something
vanilla.
happens.
Here's what it costs. Take it or leave it. It's normally not tremendously expensive. You're not going to get a deal, but you're getting basic
Insurance.
coverage.
Yeah.
I don't know. I'm not a real estate professional. Maybe you could help me out, but pretty rare to find a home under $400,000 in Long Island.
No. You're not going to find it.
You're not going to find
You're
it.
not going to find it.
So you don't want to
find it.
You don't. You have a minimum of $400,000, $500,000, $600,000 in some of the smaller towns that we have here in Nassau County, traveling up to $800,000, $900,000. Excuse me. Do you want a no-frills insurance company protecting you?
It's true. Yeah.
I wouldn't.
Yeah.
Right?
No.
So the reality is if you're good, if you're paying your premium on time, and you're not putting in, you're not claim happy. Every little claim that comes about, you're calling your broker and saying, I got to put another claim in. If you're doing that and you're keeping the house in fair condition, you don't have to have a beautiful house. Not everybody can do that, but you can't have, buckled sidewalks. Your gutter's got to be where they're supposed to be on the home. If you have refrigerators and couches on your front lawn and, it just looks unkept, you're not going to be popular to the insurance carriers.
Yeah.
So keep a clean home, keep a safe home, keep the surrounding areas of your home good. Pay your premium on time. Do whatever you can do to keep the premium down. Defensive driving, I pay on time discount, all of these nice things. There's plenty of companies that will want to work with you. Put claims in, the house looks a wreck, there's crap all over the place that the mailman could trip over. You got 3 Rottweilers, barking at the fence. These are things that insurance companies are going to be skeptical, and you're not going to be popular with them.
Yeah. It sounds like they just need to be a little bit responsible about the stuff that they have, and insurance companies will do their part.
Everybody's got their own story. You have the haves and the have-nots, and obviously the haves could pay everything in full. They don't have to worry about payments. They get the discount. And more power to them. Fantastic. And then you have the have-nots, and they should understand as well that there's discounts out there and there's ways of keeping the policy down, and what can I do to stay in good standing with these companies? Universally, everybody could do that. So keeping the house in decent shape and away from what could turn into some sort of an accident. And it's a level playing field. Everyone will have an insurance company that's more than willing to take their money.
Okay. So it looks like you'll definitely be able to get insured. Thanks. I want to thank you for coming on the show today, Jason.
Great.
I'm definitely going to have Jason come back because what I want to touch on is life insurance policies and the importance of this as well. But that's all for today. Till next time.
Thanks for having me, Dal.
Yes,
It's great.
Sir.